Hello, I'm Nick Clark. This is Counter the Cost on Al Jazeera. We'll look at the world of business and economics. This week, Russia is increasingly turning to China's yuan as its foreign currency of choice. And Moscow supports the use of the yuan in trade with other countries. Could that threaten the US dollar? Also this week, Ukraine wins the IMF's first loan to a country at war. Why did the International Monetary Fund change its rules to lend the nation? And what are the terms and conditions for Kyiv? And the IMF has agreed to inject billions of dollars into Sri Lanka's economy. But is it enough to help the island nation rein in its debt? And can the government revive economic growth? So, since being shut out of much of the global financial system, Russia has sought alternatives to soften the impact of Western sanctions. It's turned to China for an economic lifeline, and trade between the two countries hit a record of $190 billion last year. Much of those payments were made in Chinese and Russian currencies. The two biggest geopolitical rivals of the US want to counterbalance the dominance of the dollar worldwide, and Russia is increasingly embracing the yuan. Even before the war, Russia's central bank tried reducing the country's dependence on Western currencies, but the invasion has further accelerated those efforts. In the third quarter of 2022, foreign currency in the Russian banking system fell to an all-time low of 15%. And in the past year, the share of the dollar and the euro transactions on the Russian market has declined. Meanwhile, the yuan overtook the US dollar as the most traded currency on the Moscow exchange last month, with a market share of close to 40% of trading volume. Well, Russia's president is making an effort to get other countries to pay for trade in Chinese currency. After his meeting with the Chinese president Xi Jinping in Moscow more than a week ago, Vladimir Putin said, "We support the use of Chinese yuan in payments between Russia and countries of Asia, Africa, and Latin America." The Russian leader also expressed confidence that such forms of payment will be developed between Russian partners and their colleagues in third countries. The meeting between Xi and Putin was meant to cement their no-limits partnership, which was announced last year. And the two leaders have agreed to expand their economic ties. China is already a major buyer of discounted Russian oil and gas. Its imports of Russian coal have surged 20% to more than 68 million tons. Russia has also been ramping up imports of Chinese goods, including machinery, electronics, base metals, vehicles, ships, and aircraft. Well, the US dollar has dominated global trade and capital flows for decades, but its share in global central bank reserves, it's dropped to less than 60% from roughly 70% 20 years ago. The euro's share has gone up slightly since its launch more than 2 decades ago, from 18% to just under 20%. And while the yuan is being widely used, it constitutes less than 3% of global currency reserves. And China's attempts to expand the currency's international role has faced roadblocks. We'll dig more into that with our guest now. Joining us from London is Maximilian Hess, who's a fellow at the Foreign Policy Research Institute and a political risk consultant. Max, welcome to the programme. First up, in your view, how significant is this shift, this Russian adoption of the yuan?
Thank you for having me. I think that Russia's adoption of the yuan is not really a story about the yuan's strength, and certainly not a story about the yuan replacing or immediately challenging the dollar as the key global reserve and, more importantly, global trade currency. This is a story about Russia's weakness and the fact that Russia has huge issues trading the dollar. What the Western sanctions regime mean is that any hard currency that crosses the border physically or digitally with Russia automatically has a discount compared to that currency abroad. How large that is a key effort of sanctions authorities, and Russia tries to resist it. But because of that, Russia has shifted to trading in the yuan. But even then, it's still not quite as much of a share of Russian exports as dollar trade is still today, 14 months on from the beginning of this phase of the war.
Right. And Max, what are the risks associated with it, especially bearing in mind, China's propensity to sudden devaluations?
Certainly that is one risk. The other issue is that there are still capital controls in China, and how freely Russia can move Chinese yuan holdings into other currencies is a challenge for them as well. We saw this actually in the aftermath of Putin and Xi's summit in Moscow last week. The Kremlin formally requested that China ease its restrictions on renminbi trading and exchangeability so that it could denominate more of its trade with Africa in the currency. And Beijing so far has just not responded to that request.
And how widespread is the yuan's use within Russia? Are Russian people and businesses encouraged to use it?
Well, until last February, it was very rarely used. The Russian central bank did shift some of its holdings over the preceding 8 years since Putin first invaded Ukraine in 2014 into the yuan, but it hadn't really been a major instrument of trade, savings, or credit financing. We've now seen Russians open up some savings products in the yuan. We've seen trade, obviously, with China, and as I said, with some other countries increase pretty substantially. But for me, what's really key is that China still hasn't offered Russia long-term financing, even with the yuan. So the credit market there is still really incredibly underdeveloped and tiny iota of what the dollar credit market once was in Russia.
Max, you were talking about the influence of the Ukraine war and what's happened there with the sanctions and so forth in making this happen. To what degree will this pivot make a difference to the Russian economy?
Well, I think it really puts Russia in a position where it is dependent on China for trade. Russia actually runs a trade surplus with China, unlike Western countries. But the way to think about this, in my view, is not really from a position of strength, but really that China is happy to say, well, we'll take as many Russian commodities, some of which we now get at a discount as a result of sanctions on them, oil in particular, although the discounts aren't as great as they are on Russian seaborne traded oil for the Russian piped oil that comes in. So Russia's essentially become a commodity supplier state to China. Chinese exports, to Russia have increased somewhat, but the key things that the Putin regime wants, particularly material defense supplies and advanced technology, has not yet been forthcoming. So, I think it's really representative of the imbalance of power in that relationship.
And what about Putin encouraging other countries in Asia, in Africa, in Latin America to use the yuan?
Well, Putin has actually criticized what he calls the dollar system for the last 20 years and what is known as the exorbitant privilege of the U.S. dollar is traditionally its ability to borrow in deficits, but on a geopolitical basis also gives the U.S. significant political strength through the extraterritoriality of its sanctions regime. And Putin long has chafed against this and wants to push to have a move away from it. But the ruble is not really a currency that is attractive for anyone to serve as an alternative. So he's willing to promote the Chinese yuan, but this is rhetoric we've heard from Putin for 20 years. And as you mentioned at the beginning, although the dollar's share of global reserves is down a little bit over the last 20 years, it's actually come back up a little bit in the last few years. It is still by far the key trade currency. And I am very much of the view that dollar hegemony is, not under immediate threat. We've found ourselves in an economic war between the West and Russia, and the West's weaponry through the dollar system there is far larger, far more powerful, and makes that an unbalanced conflict. And Putin naturally chafes against that because he wants to take on that order as part of his conflict in Ukraine.
So the dollar not under immediate threat, you say, but perhaps down the line, are there storm clouds?
Well, I think that China has a 20 or 30-year plan to really replace the dollar, or at least to put China as the key node in the global international economic order. What's very interesting is, from my view, I'm very much a Russian specialist by background. Russia has long chafed against these things, but the U.S. largely has been unaware of some of the geopolitical strengths of the dollar, and the history of how it came to be so powerful is really a series of U.S. policy mistakes and inadvertent effects, whereas China seems to have a very coordinated and driven long-term strategy. So I don't want to say that it is not a risk, but I think, for China, it is a long-term effort. And my view is one of the issues with this, Russian-Chinese imbalance, and why we haven't seen the credit aspect to it so far, because that's what's most strictly sanctioned by the West, is that for now, China still sees Russia's efforts as more of a threat to its agenda than it does an opportunity to advance it. That may change at some point, and I think that's a key question around the economic aspects of this global conflict. But for now, I think China's strategy really is not one of embracing Russia as a partner there and more being hesitant because it has this much more long-term strategy and it's happy with the order. It just wants to be number one, whereas Russia effectively wants to undermine it entirely.
Right. And as far as China is concerned, just to wrap it up, long-term strategy for sure, but what kind of roadblocks are in the way of it expanding its currency?
Well, the capital controls that are still in place on the Chinese yuan are really by far the key one. Until that happens, the Chinese currency won't be seen as an effective means of savings and deposits internationally or as trade, because people won't want to get caught in that. Despite there being some talk elsewhere in recent years, we see this every time there's a geopolitical crisis at the end of the dollar system. There's still very few people internationally who are willing to get paid in yuan, whereas US dollar bills are usually accepted pretty much everywhere, even from a fish market in Russia to traders in Hong Kong, regardless of the level of geopolitical tensions.
Max, just great to get your perspective. Appreciate that. Thanks a lot.
Thank you for having me.
While Russia pivots to China, Ukraine appeals for international aid to keep the country running. The economy shrank by around a third last year. Its budget deficit has risen to $38 billion. And to rebuild the war-torn nation, well, that would cost billions of dollars more. But it's estimated less than half of the money pledged by the West has reached Kyiv. The nation is now set to receive a loan from the International Monetary Fund, and that is a first for a country at war. The IMF has agreed on a $15.6 billion funding package to Ukraine. It's expected to be approved in the coming weeks. The 4-year funding deal is also one of the largest financial packages Kyiv has received since Russia's invasion last year. It will help Ukraine close its massive budget deficit and support its bid for European Union membership. Let's take this on. Joining us from Stockholm is Torbjörn Becker. He's the director of the Stockholm Institute of Transition Economics, also a board member of the Kyiv School of Economics. Torbjörn, welcome to the show. So the IMF has not granted loans to countries at war in its entire history. Why has it changed the rules now, do you think?
I think these are extraordinary circumstances. That's the very short answer to this. If we remember, the IMF was set up after the Second World War, when we had all the difficulties in the world back then. And this now is the first large-scale war in Europe with these aggressions from Russia to Ukraine. So, these are extraordinary circumstances, and I think we have to look at it from this perspective.
Sure, but why this particular war? I mean, a lot of wars, unfortunately, over the years, haven't they? So why wouldn't they support those countries too?
Yeah, I think there are different aspects to this, of course. One is, of course, that the IMF is a political institution in some ways. We have member countries that need to think about how they want to support countries that have difficulties. And one important ingredient here is, of course, that Ukraine has very strong and powerful friends at the board of the IMF that controls a large share of the voting of the IMF board, of course, like the countries of the European Union, the US, other partner countries that have supported Ukraine now over this last year or so.
So this figure of $15.6 billion, how will it be distributed and how will it be managed? Will it be all for the rebuild?
No, I mean, there are different phases of this program. The first one is, of course, to make sure that the country can deal with its economic challenges in the shorter run, plugging the hole in the budget, as you mentioned, and making sure that Ukraine does not need to print money itself to finance its big deficit. So this is more, in the short run, stabilization of the macroeconomic situation. And then going forward, it will also be part of the reconstruction process. But we're not there yet, as you know.
Yeah, I mean, while the war goes on, it's just like trying to stem a flooding dam, isn't it? I mean, ultimately, the country needs the war to end to rebuild its economy.
Yeah, absolutely. And it needs the continued support of countries from the European Union and from the US, Canada, Japan, etc.
And what about the conditions of this funding? Tell us about those.
Well, I mean, all of the IMF programs have the idea that countries have to adjust policies so they will be able to repay the IMF at some future date. And there's always this idea that money should be spent in a way that supports sustainable growth and all sorts of other different dimensions of the economy. And this is no exception in that. So, there will be discussions about the size of budget deficits, how you run monetary policy, and then also institutional reforms linked to independence of central bank, legal system, etc., which is, standard things in an IMF program.
Right, standard, but it's not a standard situation. Ukraine is a country at war. Can it honor commitments when it's at war in this way?
Well, I mean, there's much more uncertainty to this program than standard IMF programs, of course. But I think if we connect back to the idea that this is based on the fact that the important powers that are part of the IMF is actually agreeing to this program, I also think of this as a signal that they will commit their own funding and help and assistance in different ways to make sure this is a sustainable IMF program. So basically what this means is that I think this is a signal that the EU, the US, and other partners of Ukraine are serious about their commitment to help Ukraine for as long as it takes, basically.
We were saying earlier how a lot of money that should have gone to the Ukrainian government has not reached the projects it was meant to go to, a lot of corruption. How are we sure that won't happen here, and how should that be fought?
There has been a lot of progress, of course, in terms of dealing with corruption. A lot of the different parts of the Ukrainian society and external partners have a lot of focus on corruption, of course, as we know. And this is one of the reasons that these recent scandals with corruption has come to the surface. So in some ways, this is a pretty good sign that now people and institutions take this very seriously in Ukraine. It doesn't mean that it goes away overnight, but it will continue to be one of the top priorities to monitor and make sure that money is not going away in this way in the future, of course.
A final question to you, Torbjörn. Going forward, do you think Ukraine will get as much funding for reconstruction and recovery as it did to try and assist its wartime economy?
Well, I think it's going to need even more support in the future, of course. But there it's also the issue of Russia paying reparations for the damage this has done to Ukraine. As most of us have been discussed in the past, about 300 billion or so of Russian assets are frozen in Western institutions. So, that is also going to be part of the discussion when it comes to funding the reconstruction of Ukraine. But then, of course, it's going to also need private sector investments, bilateral donors, and everyone else to help out with the reconstruction in the future.
Torbjörn Becker, great to get your analysis. Thanks very much indeed.
Thank you.
Queues for fuel are now a thing of the past. Food shortages reduced and cooking gas available again. Sri Lanka's worst economic crisis in decades is showing signs of improvement. But the island nation is struggling to find the funds to import necessities and repay more than $6 billion every year until 2029. The government has secured a near $3 billion bailout from the International Monetary Fund. The loan comes nearly a year after tough negotiations between the IMF, Sri Lanka and its creditors. China has agreed to support Sri Lanka's debt restructuring, which was crucial to secure the package. That followed similar arrangements by other creditors, including India and Japan. The government has also imposed unpopular measures to meet the IMF's requirements, including raising taxes, utility prices, and cutting subsidies on fuel and electricity. Well, joining us from Colombo in Sri Lanka is Chayu Damsingha. He's the product head of macroeconomic and thematic research at Frontier Research. Chayu, welcome to the program. So this deal, nearly $3 billion, but it enables another $7 billion. How useful is this going to be for Sri Lanka?
So the deal in itself, especially the money that comes in itself, the money that comes in itself right now, in itself is not something that's going to be a game changer. What is a game changer and has the potential to change the future for Sri Lanka is that this is essentially the next part in the overall economic restructuring of the country, the overall economic pathway of the country. So this allows Sri Lanka to move forward on some further reforms. It allows Sri Lanka to partner with our development partners, so the World Bank, the ADB, to finance some of those reforms and move forward, and also allows us to move forward with the debt restructuring part. So starting that process is what this IMF program beginning really crystallizes. And of course, there's a long road ahead, but that long road is now able to start now that we got the bank.
So we should be looking more at the medium to long term as far as this is concerned.
Very much. I mean, the factors or rather the reforms needed, the economic policy measures needed to take us to the medium and long term really have to start now, of course. But this allows us to start the processes and move forward.
Yeah, I was going to say, because the conditions mean that you have to act now to have the loan in the first place. So immediately, will it help shore up the economy?
So over the last, let's say, 6 months or so, a lot of the forex shortages in the country have really started to clear out. And that has started to clear out primarily as a result of the economy's contraction, really dampening down demand. That has meant that some significant amount of those forex shortages cleared us into import demand anymore. So on that side, things are looking a lot better already. This does allow us now to, for example, reforms that are required for the state-owned enterprises, reforms that are required on the energy side for us to move forward with that. So yes, this is very much a critical part of moving forward, but it's of course just a first step at this stage.
The country's been through a lot of austerity as it is. It's just the way it goes with these kind of deals that you have to go through more austerity. Can the country cope with that? Will we see more protests?
It's not the package in itself that requires the austerity, but the fact that Sri Lanka's economy had taken itself to a very unsustainable level. And then from that point, if you are to recover, you need to forget the tightening of belts. You need to reverse some of those unsustainable policies. And once you've taken those on a very consumption-driven base, tightening those does in fact end up thereby being austerity. So moving forward, one thing that Sri Lanka has currently done is hike taxes, especially on the progressive end for high-income earners. Of course, there are protests about that. There are some discussions on how in the future that might be changed. So there will be opposition to some of these reforms, especially for those that are directly affected. But in terms of what directly affects, for example, the majority of the country, I think one thing that helps is the fact that there is actually a minimum spend required in the IMF program for social welfare. So the government is required to spend a minimum percentage of GDP on social welfare. But of course, the one that really hurts in a way is the fact that electricity and fuel subsidies have been removed and the tariffs have been made cost reflective. There probably wasn't any other option other than that because of the absolutely terrible state of affairs in the two SOEs dealing with that. The alternative could have been much worse. But the fact that that is the case doesn't mean that the pain is there. So that part of it remains. Recently, some prices have started to come down with the currency starting to see a little bit of strength, with global oil prices coming down as well. So hopefully that kind of action can help mitigate some of the pain especially on the poor in the short term.
There's a need to drive up exports. How does the government plan to do that?
So Sri Lanka has always wanted to drive up exports, and they've had different strategies, different plans. For me, from my perspective, I think it's about getting any barriers out of the way and creating an environment that is more conducive to expand foreign export services. So that would look like structural reforms. That would look like improving, getting rid of regulation or over-regulation, and allowing for the currencies particularly to reflect market conditions would also be a pretty important part, because Sri Lanka's economy has traditionally, especially the last 15, 20 years, kept the currency control, which has served as a disincentive for exports. So these factors overall changing could help and create a better environment for exports, but only time will tell how much impetus it will have.
Businesses have really suffered over the last few years, especially in the past year, and the poor too. Will money be directed in that direction?
Especially on the poor, and on that side, I think, like I said, there is a minimum spend required for welfare, and that is expected to ultimately, in nominal terms, in rupee terms, mean an increase in the amount of welfare being spent in the country. We are also seeing some of the factors that led to the deepest contraction that Sri Lanka has really seen for a very long time reversing. So the interest rates are starting to fall in Sri Lanka. The currency also seeing some sort of strength, like I said. So these factors hopefully just mean that both directly in terms of, for example, welfare spend, but indirectly in terms of the overall economic environment improving, just to create a situation where Sri Lankans on the ground do feel less pain and less pain moving forward.
Moving forward, how would you see Sri Lanka's economy in a couple of years' time?
So as long as Sri Lanka can stick to this overall reform trajectory, I think there is cause for quite a lot of optimism. I'm cautious on it because having to stick to the reform agenda is the little bit of the difficult part, because the political economy of the country hasn't traditionally lent itself to sticking to these kinds of pathways. But of course, the fact that Sri Lanka is starting this time from a very, very deep contraction, there's no real fiscal or monetary or financial space to reverse. Because previously you could reverse and wait 3 years for the impacts to be felt politically. Now, if you reverse, you feel the impacts immediately within the next month or so. So hopefully that prevents a reversal on the Sri Lankan side. But on that basis, I am optimistic, but cautiously optimistic on what the future of the country can be.
Charlie Dumpsinger, thank you. So we have our show for this week. If you'd like to comment on anything you've seen, you can tweet me at Nick Clark Al-Jazz. Please use the hashtag AJCTC, or just drop us an email. countingthecost@aljazeera.net is our address. But there's plenty more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. So that's it for this edition of Counting the Cost. I'm Nick Clark from the whole team. Thanks for joining us. The news on Al Jazeera is coming up.